Hey there, guys. Welcome back. This is Josh Cantwell with the Real Estate Investing Made Easy podcast. Welcome to our YouTube channel. I don't know how you're watching this or seeing this, but I have another fantastic friend of mine and training for you today. As always, you can visit us at strategicrealestatecoach.com for tons of free investing information and free ebooks. You can check out all of our videos. And today I got my good friend with me. This is Sal Buscemi. Sal, what's up, man? How are you today?
How are you, Josh? Thank you.
Um,
Thank you for making the time. This is cool. I've never done a podcast before, so
yeah,
looking
you
forward
got
to it.
it. I tell just like I told you, and I tell the others. This is the colorful version. You kind of get behind the screen sometimes, and people don't get to know us as well. When we get on video and audio, this is where they get to see the real us. So
Mhm.
guys, this is my buddy Sal. Sal and I have known each other going on probably 5 years. Sal is a Wall Street guy. He used to work at Goldman Sachs, and if you know anything about Goldman, Goldman is sort of the premier elite level investment banking firm. I've heard and I've seen reports, Sal, that it's easier to get into Harvard. Is that right? Than to get a job at Goldman. So
It's
you
yeah,
must
they're
be
very, very.
you either bribed somebody real good or you really smart.
Yeah, you can't. I think they just want the right people who are driven and focused. I think that's really what it comes down to.
Yeah, absolutely. That's awesome. So, Sal actually runs a boutique investment bank called Dandrew Partners, and Sal and I have, we're affiliates and we promote each other's programs and products, but we also share a ton of great, ideas at mastermind groups that we attend. Just as recently as a few months ago, Sal and I were together face to face at an internet marketing mastermind out in San Diego, and that was a good time. And so here today with Sal, just to kind of uncover with him a little bit more about his experience working as a Wall Street trader and investment banker, and as well as what he does with real estate, specifically commercial. And he's actually out there doing commercial deals and putting together real estate funds. And what I love about it is he actually funds deals for students. He actually has students bring him real estate investment opportunities, and he funds deals for his students. So people don't need to use any of their own credit or any of their own cash or down payments working with Sal and working with him. So, Sal, I just want to give everybody a little bit of color about you. Why don't you just give us a little bit about your background to start and tell us, why
Sure.
people should kind of listen to us today instead of jumping off and doing something else.
Yeah, no, I understand. I think people are starting to see right now that there is a lot of opportunity in this economy as it relates to commercial real estate.
Yeah.
We saw this happen in 2008. Press, the mainstream media loves the victims. They love, focusing on that aspect of the widow and orphans. However, what they don't really care about is the fat cat commercial real estate investors, and there's many of them out there. And the commercial real estate investors actually have the same problems that a lot of real estate investors had during the credit crunch. And so we're a private boutique real estate capital provider. Sometimes we provide debt and sometimes we provide equity. And our core clients are people who have found something interesting to buy. They don't have all the money they need. Or second is people who have been offered to buy their note back at a discount from their lender. We might say that's a short commercial. We don't really say short sales. We say discounted payoff. We're using a grown-up language here that grown-up men and women use in the commercial sector. But, those are big dollar deals there, and there's a lot of them out there because a lot of the loans that were underwritten during the past credit crunch are coming due in the next 5 years. So we see a tremendous opportunity to become a capital provider and for have students, we call them intermediaries, to be able to work with us intimately to be able to fund these deals, and they get the benefits of being involved in these deals that we'll probably talk about a little more on this call without having to deal with the burdens of ownership, such as being a landlord. Quite frankly, I don't think too many people are cut out to be commercial real estate landlords. We see a lot of what we call the bad operators coming out, and they bought things that they didn't understand. They would buy. There was a group of plastic surgeons, for example, in Southern California that bought a multifamily in Dallas because they thought relative to California, Southern California, that it was cheaper, but they wound up getting their clocks cleaned. So there's a lot of opportunity there, and real estate's great because it's an equal opportunity wealth creator, but also you can participate in several different ways. And that's
Yeah.
what really we've been doing is recruiting people, intermediaries, to work with us to be able to find deals into structured deals and invest alongside of us in multi-million-dollar deals they probably would never be able to get involved in on their own.
Yeah, very cool. Very cool. So, what I just gathered from that is you guys have access to tons of money, and you're looking for
That's correct.
people out there in the marketplace who are willing to be, source deals, bird dogs, looking for opportunities, whether it's bulk REO or notes or commercial, and bring good
Correct.
investment opportunities to you guys, and you guys jump in with the funding. Is that right?
Correct. Yeah, we are discretionary. So you got to think of us as a cowboy. Fortunately or unfortunately, we're not a bank, so we don't really care about your borrower. For example, talking about commercial, we don't really care about your borrower's credit history. We care about their experience. There's a lot of people who got caught in the downdraft. We understand that they have some scars on their back. They might have had to file bankruptcy, or they just have issues where the bank has, a regular bank would have made them radioactive in order not to lend to them anymore. So we put together, and that's true, and it's happening a lot today. So, we're fine with that. We just care about the collateral, and we care about the experience of the sponsor. When we're talking about bulk REO trades, my experience was after I left Wall Street shortly thereafter, we were doing a lot of onesie, twosie deals, maybe pulling a group of homes out of bankruptcy, not homes, but like what the condos, somewhere, something went wrong, we would be the person that would go in and effectively be the grave dancer, if you will, buying these out of bankruptcy. And then we found that there was a tremendous opportunity in 2008 when the residential mortgage business started slowing down a lot. People, who were thought that they could refinance out of these were having a lot of problems. So what we did was we had a $30 million fund that we set up. And that was a pretty interesting experience too, because that's when things started really getting really hairy and really messy. So we got out of that in 2010. It was a very quick 2-year term on that. And then right now, actually, I spend my time between New York City and Las Vegas, of all places, because we like the edgier deals. We have a $15 million fund that we're closing down right now called OFRE Fund, Oasis Fractionalized Real Estate Equity for short. And what that is basically we were buying a lot of hard money funds out of receivership that were facing regulatory issues. They were facing capital issues. So we were able to actually go in, resurrect these funds, and give the investors back some money, not all of it, but some money, but we were able to buy a lot of assets cheap. And what we're doing now is we're what we call clearing our balance sheet. We're clearing off these assets on a fire sale to other investors and other REITs and other funds. We're making our money that way. And then we're talking about what we're going to do next steps as far as like more of the one-off type of funds that I like doing. And it's really a fun business. And a lot of the intermediaries that have worked with us over the years have started their own funds too as well. It's not that difficult a business. You just got to wear the right clothes to the party, Josh.
Yeah, sure. So if somebody wanted to kind of go from, I think you just called me a child, by the way, by saying that I refer to discounted payoffs as short sales. You said that you're the adult and I'm the child. I think that's what, did I just catch that right, Sal? Busting my chops
Josh,
there.
maybe.
What's up with
I
that?
just want people. Yeah, no, I appreciate that. There's certain terminology there. It is.
Right.
And what we want to make sure is through the course of this call, I want to make sure people are speaking the right language when they talk to people. I want to make sure if they're calling a lender, they're talking to someone, commercial short sales. Short sales are primarily a residential convention,
Sure.
right?
I'm just
You're trying
busting
to
your chops,
negotiate a
man. It's
discounted
fun.
payoff. We don't really call that, and commercial people like to have a more sophisticated name for things. We call it discounted payoffs. But there's a lot of opportunity there too. Remember, people in commercial are kind of afraid of commercial to begin with because there's so many zeros, but that's where all the opportunity is. You're
Sure.
starting to see, even if you people who've been working with you for years, I would bet that there's a lot of opportunities that are in their inbox that they probably overlooked because they didn't really understand what they were looking at. It's sort of like the lost keys in the morning before you go to the office, Josh.
Yeah.
You know there's opportunities there, but you can't put your finger on it. And that's why we're here, to help supplement their business working with you as a strategic real estate coach to be able to build up their deal flow and supplement and augment their business with real, practicable, meaningful wealth creation strategies in commercial real estate.
That's awesome. So tell us about the commercial market, Sal. You've been doing it for a long time. I mean,
Yeah.
what types? Give us examples of some investment opportunities and about this wave and all these balloon notes that are coming due because of all the notes that were written 5 and 7, 8 years ago. Tell us how
Right.
big is the opportunity? What are some things that you're actually working on at the moment?
It's a $1.4 trillion opportunity, and we come to that because a lot of the loans that were written a long time ago usually have 10-year, what we call 10-year bullets on them. And they are coming due, and there's no hope of them actually getting refinanced. Banks are not lending anymore. Life companies really aren't lending. If a bank is lending, they want to make sure that you have the best credit on earth and you have, a lot of money to bring to the table. Let's face it, somebody who's found something interesting to buy in commercial is not going to have 40% equity to put down, right? Banks are only going to go up to 60% LTV. So it's incumbent upon other capital providers like us to provide what we call the equity. Sometimes we're debt and sometimes we're equity. And that's all based on what happens in the capital structure. Think about it. If you were to go out and buy a house and a hard money lender is going to go up to 65% LTV, but you don't want to come out of pocket the remaining 35%, you're going to find a partner, and that partner is going to provide the equity. It's the same thing in commercial real estate. As far as geography is concerned, a lot of the intermediaries, a lot of the deals that are getting done are what we call I wouldn't say in a scientific basis tier 2 cities, but we have a very sophisticated approach looking at this, and I'm saying that jokingly, is that if you were to pull out the back of the USA Today newspaper, open it up, the first section, you see that there's a beautiful colored map of the weather.
Yeah, right.
And so there's all sorts of cities, and the cities are categorized by if they have a box, if they have a dot, or if they don't have a dot or a box. And if you look at it, you see the top tier cities like New York, Los Angeles, San Francisco. Those are affectionately what we would call Class A cities, and that's just us telling the people listening here, a very easy back of the envelope way to find where the deals are. And they're not in Los Angeles, San Francisco, New York, and Miami. There's a lot of foreign money that's coming in and paying cash, so you're not going to really be competitive there. Where you are going to be competitive are the cities on that USA Today weather map that have a dot but don't have a box. So we're talking about maybe cities like Naples, Florida. We're talking about maybe some outskirts, parts of urbanized Texas. Waxahachie is a deal that we just started. We just issued a term sheet for last week. And other areas like that where they're not tier 1 cities, but they're more inland, but they are still very strong, robust cities that have access to jobs. What we're seeing a lot today is the types of assets that we love funding are in the 4 food groups, and that includes multifamily, which is huge because a lot of people are becoming renters today. We're in a different type of economy today where a lot of people have all but given up home ownership and they're looking to become tenants again. Second is industrial. Industrial warehouse is a big deal today. Think about it. Amazon has been buying up a lot of these spaces. Yes, they have. And it's really important, actually. We see a lot of these deals where there's a lot of flex space, industrial type of warehousing that has been converted, and Amazon and eBay have been drivers for that. Third, we like office space, but we like the office space that has a good, strong tenant in there. You got to think about like an old law firm, or something similar to that. And then lastly is retail, and we love grocery stores. We love grocery-anchored retail, pharmacy, food. Let's face it, that's not something that somebody's going to buy and have a drone drop on their front step. If you need food and you're hungry, you need it today. And that's why companies like McDonald's will always be around. Elderly people don't trust the internet, so they're not going to buy their prescriptions online, but they're going to trust going to the Walgreens or the CVS's. We love those. So that's really the 4 food groups that we're looking at right now. Development deals really, they're sort of, if they're busted and they're halfway done, we like looking at those. We like to see the story on those, but no brand new development right now. We also like a certain part too. We like doing hotels, flagged hotels only. These are the Marriott, these are the Hilton, these are the Hyatts, not the mom and pop that you see on a Hotel Impossible on Monday nights that my wife makes me watch on the TLC show. Where some retired urologist goes out there and buys a hotel, sight unseen, doesn't do any due diligence, and runs into the pool. We want to deal with flags. And that's really what our bread and butter is there, and that's what's getting funded. Cool. And those are deals that actually get funded within 60 days, provided the sponsor has experience.
Gotcha. So ultimately what you're looking for is, your Wall Street background has put you in a situation to get access to funding and access to capital through your own fund.
Correct.
And know that there's these commercial assets out there that are, the kind of stuff that you like to buy and fund that have a good future. And then in the middle, there's there's this commercial bubble happening with loans because a lot of these assets that you want to own have balloon notes and mortgages that are coming due. And you're essentially looking for intermediaries, students or clients or whatever you call them, to kind of
Correct.
bring you the deals so you can put your money in play, and whether it's debt or equity financing,
Absolutely.
because you really can't do it all, Sal. You and I both know. I mean, you only have,
No.
so much time, and if you're good at raising money, you can't also be always out there vetting out every single deal unless you can just look at it on a piece of paper sitting at your desk.
Correct. And that's not, I know what my strengths are and I know what my weaknesses are. My strengths are out there leveraging my contacts, leveraging my experience, raising money around deals. We do a few little private partnerships too. We don't really talk about that much, but we're in the middle of buying a Shopco right now in rural Iowa. We like it because it's trading very well. It's a very steady Eddie market, and that's a market that's not going anywhere. Walmart's not coming to do that. So there's all sorts of ways that you can transact a deal. And we break it down into three basic parts. Number one, we call it capital placement. That means using our capital to go out there and fund these deals that have a loan coming due, or somebody has found something interesting to buy. Maybe that could be you, Josh, but you don't have all the money you need. You bring it over to us, and we analyze it. And we only use back of the envelope underwriting to pre-qualify these. We're not going to ask you for everything. We're not going to ask you, and we hope you don't send a 20 megabyte attachment PDF which has a lot of information on it that's basically useless. We ask for 5 pieces of information first. And the other part of the business is what we call capital formation. That's people doing syndications, raising money using private money, which I know your clients know your students know a lot about, to be able to buy assets that they found. It could be an apartment building, a duplex, a retail center, whatever it is. And the third, we call it asset arbitrage, and that's basically what you're seeing is a lot of the non-performing loans that are coming around right now. There aren't really a lot of REOs today as there was back in 2010, 2011. There's a lot of non-performing notes and reperforming notes, and believe it or not, banks are actually buyers of performing and reperforming notes. Smaller funds like ours are buyers of notes, not performing notes. And so we actually have a servicing company in Miami that handles all of that stuff for us. So we like to think of ourselves as being like a supermarket, if you will, where we've left off, where we've picked up a lot of people have left off. But we're also cowboys in a way where we'll look at any deal as long as the story sounds good and we're getting in at a good price, a good basis. We'll be very happy to do that. And that's really our core business right there.
Very cool. Very cool. So essentially, I mean, to break it down, you guys are great at raising money, getting access to capital, and evaluating deals, and you need more deals to look at, right?
Absolutely. Yeah. I mean, if we only had $25 million available to us, we wouldn't have to have this conversation. But what a lot of people don't understand is that having a lot of money represents both an opportunity and a challenge.
Let me put it in play, man, or you're going to lose it.
Yeah. If you don't put that dry powder to use, guess what? Come December, the fax machine could start humming again, and that would be what we call redemption requests. Well, all of you are having fun with family during Thanksgiving. We're sweating bullets. We're hoping that a large institutional investor isn't going to redeem their shares and want their money back to place in somebody else's fund. It could be Josh's fund. Who knows? But if we're sitting on money too long and it's not active, people get kind of antsy about that because they're giving us money because they need that rate of return. They need that cash-on-cash return. And the reason is because they have beneficiaries they have to pay. If you know anyone who's on a pension, guess where that money comes from? It comes from investments. And they make investments into companies such as ours to be able to pay their beneficiaries and their retirees. So if we're not moving that money fast enough, we can come into some problems. And that's why we like working with normal real estate investors, because that's how we all win.
Yeah, fantastic, man. That's awesome. So, Sal, tell everybody, first of all, we've set up a little website where they can check you guys out. It's just www.shrecprivate.com, SREC private.com. They can visit that site and get more information about Sal. Sal, I know you have a blog, you have a website, you have a phone number. What if somebody wanted to get a hold of your office or opt in for some of your ebooks or something? Where would they get a hold of you?
They're going to want to go to dandrewmedia.com. DANDREW media.com. We have a lot of books that I've written myself on there. But if they have any questions whatsoever, they're going to want to call 866-325-2330. 2336. That's 866-325-2336. And that's where we're going to be able to answer your questions very succinctly. Any question, there's no such thing as a stupid question, regardless of experience. Maybe you have a lot of experience, maybe you don't have any experience. That's fine. We're going to hook you up and show you exactly what it is you need to be successful in this high-dollar business. And that's really what we're looking for, what we call grown-up men and women, people who really want to step up their game to really learn how this high-dollar business works, because it's a lot of fun. It's a lot of fun, and you know, guys like you and I, Josh, we have a lot of stories to tell, and we have a lot of scars on our backs. But the reason why we train people is because so they wouldn't have to go through the same thing and get the scars on their backs and have to have their shoulder popped in the joint and everything through all the you know, trials and tribulations that we had to go through doing this. And you know, we've done a pretty good job of compressing my 17 years in the business into something where people of any walk of life can understand it easily and become, you know, a player rather than a spectator. I think that you're starting to see over the next 5 years, and it just started in 2013. I think over the next 5 years, you're going to see a lot of pain in commercial real estate. And for people who have been around long enough to remember the RTC in the late 80s and early 90s, you're going to see that situation too happen. And that's really a great thing.
Yeah, fantastic. Yeah. Guys, listen, you know, the reason why I wanted to invite Sal on, number one, is just guy just knows his shit. I mean, just knows it back and forth. He's a good friend of mine, known him a long time. We've been in mastermind groups and stuff like that. So if you have any questions about commercial, you want to get involved in commercial, you're looking for funding for commercial, maybe you're a residential investor and you're flipping a lot of residential properties and you're saving a lot of your profits and you're thinking, I want to make the next step. What am I going to do for long-term cash flow? What am I going to do to hold assets? Well, my theory has always been flip for income and hold for wealth. And if you're going to hold for wealth long-term, you want to hold some commercial for sure. You certainly can do a lot of single-family properties and duplexes and fourplexes, and that's great. The step into commercial is a fairly decent-sized step, but it doesn't have to be as long as you're partnered up with a guy who knows what he's doing. Sal is that guy, and he's got the funding, which is the best part of it. So if you have a deal, he's got phenomenal ways to make sure that you can make money and get paid for bringing him deals. He's got phenomenal trainings. You can check out the trainings at srecprivate.com. So definitely, if you have any interest in commercial and stepping into that ball game, make sure you get a hold of Sal in his office. So, Sal, any kind of parting, words of advice or ideas for anybody looking to make that step?
Yeah, I think what you have to. There's many things. There's an old mentor I have. He's about 75 years old, and he's seen it all. And he's probably worth about $40 million, we guess. And he's always wishing that he always had more stuff that he bought during the RTC. The last time this big commercial blow-up happened, this meltdown. He was also buying hotels for 1 times cash flow, which is just incredible. And, we talk about that on our website, some of the training that means. But he always wishes he had more stuff. And the other thing is he always wished he always had not just access to capital, but also how to be able to raise his own capital on demand. And I think that's separating a lot of investors today, is that the people who are still around are not the flakes. These are the people who are still dedicated in the industry, such as us, who are able to raise capital on demand. And I think that's a very powerful asset to have, is to be able to do that. A lot of people were dependent on bank financing, subprime loans to be able to buy a piece of real estate. Those days are over. And today, the savvy investors that have access to private capital, such as ourselves, or have the ability to raise capital on their own, are the ones who are going to prosper beyond their wildest imagination. And the reason for that is because there's a tremendous market right now of nervous money that wants to get out of the stock market, and they're focusing on what's called the self-directed IRA, which I know, Josh, you talk about a lot.
Big time.
But I think that's the next big, huge thing to hit, is that people want more intimate type of money management. Hey, I know Josh. I've known him since he was young. He's a good kid. He's local. I have his cell phone number. I'm going to be able to call him when I give him my money and find out how things are going. If you look at what Martha Stewart did back in 2002 when she did her insider trading scandal, her stock plummeted about 10 points in one day. If you try calling Martha on her cell phone, good luck calling that battle axe on the phone. It's not going to happen. So I think people are scared. I really think that people are really looking for more of an intimate form of an alignment of interest with someone to be able to invest their money in. And there's some sophisticated investors who are on this call who might be at that point in their career where they're probably thinking, well, Sal's doing it, I could always use his money, but at the end of the day, I want to do this on my own. So I'm really want to inspire people to be open-minded when they think about this business, because I really think that that's the next big thing, is people looking to put money outside of the stock market into something they don't understand and put it into something they can understand, secure, insure, and touch. And that's always been the real estate asset, and that's why I love the asset class.
Yeah, absolutely. Phenomenal. Yeah, and I'm a firm believer in exactly what, and there's so many different things out there that people have lost faith in the stock market because the market went down so bad and the market's back up now, but they're really not sure how long that's going to last. I think people are confused by the market because you take a company like Apple Computers where it just had such a long run up for so long, and then now it's dropped 20 to 25% in the stock price. People don't understand why. And that's really at the end, Sal, what I'm gathering is people are just confused or not really sure why certain things happen in the stock market and why they don't, versus what I tell people about real estate and private lending and investing is that you can never say, right, it's safe, and you can never say it's guaranteed, but the one thing it is predictable. You can take an asset. It doesn't matter if it's a $100,000 house you can buy for 50. It doesn't matter if it's a $10 million building that you can buy for $5 million, and you can reposition it, and you can lease it up, and you can do things. It's predictable. Versus the stock market, to me, is like, who the hell knows what's going on tomorrow or next year? We have no idea. So that's why I've always preferred real estate with private money. You mesh them together, it becomes predictable. And that's why I think you're right. You only have 3% of all the assets that are out there are currently self-directed. I firmly see that doubling or tripling in the very short future because people are going to recognize, well, I can self-direct my own money and I can buy non-performing notes. I could buy commercial. I can buy residential. And for those people who understand that real estate, even though we had this bubble in 2008, that's probably not going to happen again anytime soon for a long time. But to understand the real estate markets, the commercial, residential, and private money is where the future is at to create real, substantial, long-term wealth.
Correct. No, I agree with you there. The stock market's rigged. People are flipping stocks in fractions of a second. I'm serious. While everybody else has been told to buy and hold for the past 30 years. Meanwhile, they're running circles around your money, making money off of them. They're skimming off the top. I mean, that's something I'm very passionate about. I love the markets. That's, I study financial history. I'm a financial history geek. But at the end of the day, Josh, you're absolutely right. People have no control over their investments in the stock market. And the other thing, too, on top of that is they have no idea what's driving stock market prices. And I can tell you offline, there's a lot of funny things that goes on in the stock market that common investors, mom and pop investors would never be able to figure out on their own.
No way.
And they're always
I saw a program not too long ago. I think it was on 60 Minutes or 2020, and there was an investment bank or a trader in New York. Well, no, it wasn't the Mike. I don't think it was the Michael Lewis. Yes, it was the Michael Lewis one. I love that dude. What an unbelievable. People were putting in trades, institutional investors putting in trades, and only half of their trade or their order would get fulfilled because somebody else would see the trade and buy it a half a second before they did. And then the stock wasn't available, and then they would have to, and the price would go up, and they were making money like that. So they're having to install these fiber optic lines to get closer to the trading houses. That's silly business. Come on, man. Right? I mean, you know that even better than I do. So, but I saw that, and I love Michael Lewis. His books, The Big Short, and phenomenal books. And even the movie he did about the football player. Yeah, Liar's. I mean, just unbelievable author. But that, to me, I mean, solidified why I don't trust the market at all. Because if somebody else can use technology and fiber optics to beat me to a trade, and then they make money off the fact that they got there before me, that's just not how it's supposed to be. So let's invest in real estate instead.
Exactly, and it's slow, and it's dumb as dirt. It really is.
And it's predictable. I love it.
And it's very predictable, and it's insured too, which is something that a lot of people can't say about their 401ks, to say the least.
So, Sal, one more time, how do people get a hold of you, and then we'll wrap up.
Yeah, they want to call 866-325-2336. It's 866-325-2336. You can also go to, I'm not going to use SREC, it's S-C-R-E, is it S-R-E-C?
There you go,
Private.com.
srecprivate.com. There you go.
srecprivate.com. You want to learn more about how we're working with Josh intimately for only his members and his members only. So this is quite an experience. This is quite an opportunity right now. I think it's a once-in-a-lifetime opportunity. And once you start learning about commercial notes and you start learning about things that you probably heard of, but many people really don't understand what they're talking about, such as preferred equity and mezz pieces and mezzanine financing, things like that, you're going to find that there's a tremendous amount of opportunity that just people are just ignoring because they can't really identify it. So there's a lot of opportunity out there. 866-325-2336. You want to know a little bit more about us, you can go to dandrewmedia.com, D-A-N-D-R-E-W media.com. But I thoroughly urge you to go to srecprivate.com, srecprivate.com.
There you go. Yeah, you can get direct access to Sal's programs and training there. So guys, listen, if you enjoyed this quick interview with Sal and I, please leave us a 5-star rating. And also leave us a quick review. Tell us what you thought about the interview. Tell us what you thought. If there's anything additional about commercial that you'd like to know, leave us a comment right there on our YouTube channel or on our iTunes channel, and we'll definitely respond to you and maybe even do another follow-up interview with Sal here shortly. So thanks a lot for being here, Sal. Really appreciate it, man. Talk to you soon.
Thank you very much. Thank you.
All right, take care.